Hello and welcome. You're watching Business Today Television. I'm Tanya Anisha and this is Market Today, a show where we'll get you all the latest market updates, stocks and sectors that are buzzing in and much more. And well, let's look at the markets at this point in time. The good news is that we have recovered over 300 points from the day's low, 65,727 level on Sensex, 734 points down tick there. Bulls completely knocked out. However, 19,500, that is the level that we have that is still intact. So 19,511 on Nifty, 222 points cut there as well. There's weakness across the board, and the Fitch has downgraded, the US credit rating, and the impact can be clearly seen on the Indian markets as well. Broader markets, they are also not supporting at this point in time. 500 points cut there on mid cap, 37,235 level. 1.3% downtick as we speak. Small cap also not performing today. 173 points cut there. 11,608 is the level where we are at. And if you look at some of the gainers and the losers from today's trading session, it's some of the FMCG counters that are supporting the markets as we speak. Nestle India is the top gainer, 1% uptick there. 22,900 level. DV's Lab, one of the top gainers, and HUL. Clearly some of the FMCG counters that are supporting the markets as we speak. And if we talk about the losers, clearly Hero MotoCorp, the stock was down around 3% yesterday also. And the ED raids news clearly not working really well for this particular counter, 3.6% downtick there. 2988 the level where we are at. Tata Steel, Tata Motors, these are some of the other losers, 3% downtick there as well. And if you look at some of the other losers, NTPC, now this stock was performing from the past two sessions, but today clearly profit booking taking place in this particular counter, 2.7% downtick there, 219 is the level. Eicher Motors, clearly auto pack, the space is in focus on the back of the auto sales numbers, and clearly markets not liking the numbers coming in from this particular company. SBI, Coal India, BPCL, these are among the top losers as well. If you look at sectoral indices as well, Nifty Bank, that should come up for you. Now the 50 DMA level for Nifty Bank is 44,598. That is still intact, and 690 points downtick there. 44,901 is the level as we speak. And if you talk about some other indices as well, Nifty Auto down around 2%. Some of the auto names like Hero MotoCorp, Tata Motors, Eicher Motors, Bharat Forge, these are not really supporting the markets as we speak. PSU Bank down around 3% in today's trading session. That index should come up for you. And clearly Canara Bank, PNB, Bank of Baroda, these are some of the counters that are not really supporting the markets as we speak, and they're down around 3 to 4% in today's trading session. But now it is important to understand that where are the markets headed going forward and where are the pockets of opportunities. To discuss this, let's welcome our guest on the show today. We have with us Mr. Sharma, who is the founder of Green Portfolio. Divam, thank you so much for taking the time out and joining us here on Business Today Television. Bulls absolutely knocked out as we speak, but can the Fitch news, blow up into something even bigger, or maybe we are paying too much attention to it right now?
See, market needed a trigger to actually. We had hit all-time highs recently in India as well as in the US, and we have seen a very good run over the last 5 months. And if you look at the historical data over the last 10 years, it has happened 5 times that markets have grown significantly, constantly over 5 months period. Right, so obviously a healthy correction was needed by the markets, and there was a trigger that was required for this healthy correction. And Fitch came in as that trigger today to ensure that that correction gets started. But from what we understand is that the euphoria in the markets are still not there, and what this Fitch rating would do is that it would induce the US Fed to stop the rate hikes and also go in for an early cut that would be liked by the market. So it's just a temporary kind of a correction, which we consider as very healthy and a good buying opportunity going forward.
Okay, good buying opportunity. That's the word coming in. And also, Divam, it's a fact that India's domestic story that is still intact. But if we talk about FIIs, after pumping in about 1.5 lakh crore rupees on the Lal Street in FY24 so far, foreign institution investors have shown, some signs of exhaustion in the last few days. Your thoughts?
Yeah, exactly. So if you look at the FII trend, they started selling in November 21, and after that they started buying when the RBI reversed its policy and went in for a pause. And after that, so for the next last 4 or 5 months, we've been seeing a good money being flown in by the FDI, and we believe that this is a long-term sustainable trend, and this is just the beginning. We are seeing the other emerging market players or countries like China not getting that kind of a growth as anticipated, and we are seeing a lot of FPI money wanting to flow to India, and that trend is going to continue. Definitely, there's a blip. There's definitely a pause for a few days or a few months in between, and that is particularly because of the reasons globally or macro reasons. If you look at the domestic reasons, if you look at the recent data points that have come in, be it the GST collection, be it electricity consumption, be it the ITR filings, be it the PMI in manufacturing, all data points in India are pointing towards a growth. And we are seeing a positive trajectory. Even the capex coming in from the corporates is showing a positive trajectory. So from an India standpoint, we are in a very good positive trajectory. But definitely the global factors are going to impact the markets. And we have seen a good bull run for the last 5 months. We had to take a pause, and I think the moment has come to take a pause, and that trend was being reflected by the FPI action over the last few days.
Okay, absolutely got that. And also, are there any valuation concerns? I mean, especially after the sharp run up that we have seen in the markets, are there any sectors that are looking, overvalued at this point in time?
Not really. See, we are going to see a good run if you look at FI 23-24 projections. If you look at the future projections post that, we are very positive in terms of the growth that is going to come in. Even a lot of corporates are going in for capex plans. The capacity utilizations are at their highs. A lot of consumption is continuing. If you look at the car numbers that have come in recently, they are very positive. They are looking very positive, and even we are seeing growth in exports from certain sectors. So we are definitely poised in for a good growth. And for keeping that in mind, the valuations are not looking expensive on a broader basis. We have not seen an euphoria in the markets. If we were to get scared, if there is a euphoria in the markets and everything is running left, right, and center on a daily basis, we have not seen those kind of markets. Stocks uh, have grown in a positive manner. There's no euphoria in terms of the growth in the prices of the stocks. So we feel that this is just the beginning of a large bull run, and we are still in a bull run. It's a healthy correction in the bull run.
Okay, we are still in the bull run. That's the word coming in. But let's talk about your portfolio. I mean, what is your own portfolio positioning right now? And is there any change that's going to happen after this Fitch cut?
See, we are long-term value investors, so we usually do not get jittery unless and until there is a long-term impairment in the business. We
Okay.
saw some long-term impairment in certain businesses which were exporting to countries like US or UK in 2022, and that's when we actually rejigged our portfolios and allocated to the domestic stories. But as of now, it is status quo. But if you look at the sectors, we are very gung ho about the sectors which have not done that well over the last few years or last few quarters. Like sectors like pharma, sectors like specialty chemicals. So there the valuations are very comfortable. if you look at the pain points, they are mostly being factored in. Uh, we are in the last phase of funding. We are seeing some large companies reporting good numbers. So we feel that we can be contrarian and see where the value is, see where the sectors which have not run up, and take positions there, considering a 1 to 3 years kind of a horizon. So that's what we are doing. We are very gung ho about the PLI sectors. We feel that PLI story has just started, and we are going to see a lot of positives coming in PLI in the years to come.
Okay, and talking about chemical space only, some experts do believe that there is, cyclical slowdown that is happening in this particular sector. Do you also believe the same?
See, we have seen some foreign, large specialty chemical companies facing some headwinds in the sector, especially in commodity chemicals. In commodity chemicals, there has been some pressure coming in from supply coming in from China, and that has had an impact on the commodity prices, chemical commodity prices, and that has impacted the margins as well for a lot of these companies. But if you look at specialty chemical, we see that a lot of opportunities are coming up there. Especially, I feel that China plus one and PLI is going to be a game changer for this sector. We feel that we take this example very often that China exports around $1,100 billion of chemicals to the world. India exports around 25, around $90 billion worth of chemical to the world. Even we take $100 billion worth of business from China, we are going to see a lot of the domestic specialty chemicals companies sitting on a $1 billion opportunity. So we feel that increase in export market share to the rest of the world from these specialty chemical players, as well as reduction in imports from countries like China, we are going to see a lot of positives going forward. And what the last 2 years has done is that it has made the sector very attractive in terms of valuations. So going forward for the next 2 to 3 years, we are very positive.
Okay, absolutely. And Divam, let's talk about earnings. I mean, what's your take on the earnings so far? And if you talk about specific stocks, stocks like JSW Steel, Tata Motors, Dr. Reddy, Cipla, and Kotak Mahindra Bank, these are, among Nifty constituents that saw highest upgrades in FY24 EPS post June quarter results. Your thoughts on this particular space and on the entire earnings that have come so far?
See, it's a mixed bag. We are seeing some negatives as well as positives. So, like what, like in terms of margins, in certain cases there have been improvements, but in certain cases the guidance has not been very clear coming in from the management. We have seen some of the managements not giving a very positive guidance for the coming quarters, and they are so it's a mixed bag. I feel we mostly are invested into the small and mid caps. So over there, we are seeing a mixed bag of results. But going forward, like if you look at the valuations, it is still I don't think that they are stretched at this point in time. So we are keeping our positions intact, and we are staying invested.
Okay, absolutely. And if you talk about broader markets, they have also seen a pullback as we speak, and small and mid cap spaces they have been doing well, especially China plus factor as well as fall in raw material price have supported the sentiment. But how should one play this theme, especially after the sharp run up that we have seen in small caps and mid caps?
See, like if you look at the broader markets, there are a lot of opportunities still available. It's
Okay.
not about only certain stocks that have gone up. You should be looking at valuations. There are even in sectors that have run up, there might be certain smaller companies that are showing relatively good valuations. So you have to look at contrarian sectors as well. Like recently, we have seen steel sector doing well. because it was not doing that great in terms of market valuations. Market was not reporting them, saying that there were some price falls, there were some restrictions, etc. Now all those things are getting lifted. We are seeing we saw a good rally in the sector. So if you try to be contrarian, if you try to be rational on the valuations, you would find a lot of plays still. We have seen, even if you look at the SME sector, we are seeing a lot of opportunities in the SME companies as well. These are very small based companies, but very niche plays. We feel that a lot of these sector plays are not there in the large caps. So if you want to participate in these sector plays or in these categories of industries, you have to go to the SME sector, and they having a low base and getting access to a lot of capital can really multiply from here doing capex. So we feel that there are a lot of opportunities in the small and mid caps even going forward. Even now we have some companies that are single digit price to earnings and very comfortable price to book value kind of matrix. Yeah.
Okay, and some of these stocks from this particular space only, like RVNL, MassDoc, and there are some other examples as well. We have seen a sharp run up in NTPC also, though we are seeing profit booking today. But what about these stocks? I mean, they have had, you know, a dream run. What's really next for these stocks? I mean, is there more steam left?
See, especially PSUs, as a portfolio manager, we abstain from investing in PSUs for a long-term capital appreciation standpoint. Definitely, there is a lot of value and a lot of value unlocking. And the valuations had got very comfortable in these PSUs over the last few years. So that run-up was due. But from a long-term standpoint, at these levels, we would abstain because we do not see that kind of a capital appreciation in PSUs over the coming years.
Okay, absolutely. And if you talk about some of the FMCG counters as well, Divam, they are supporting the market today. Even if the market is down, Nestle India, you know, HUL, some of these counters, the results were not that impressive. Of course, Marico also one of them. Varun Beverages, your thoughts on entire FMCG space and especially these big names like Nestle, HUL, ITC?
So a couple of reasons for that. One is that this is a classic case where markets start falling or you have negative sentiment. These stocks start gaining. So it is definitely prevalent in what happened today. Second, we feel that the rural economy is picking back. So we feel that there could be. So we see that rural economy is picking back, and we see positive vibes coming from rural economy, and that is playing a positive factor as the consumption in FMCG sector is going to increase.
Okay, absolutely. That's the verdict coming in on FMCG pack. And on that wonderful note, thank you so much, Divam, for sharing these insights with us and being with us here on Business Today Television. So let's again look at the markets and see how the markets are doing at this point in time. And we are okay. So we have recovered over 400 points now from the day's low, 65,820 level on Sensex, and 19,535 on Nifty. Experts clearly say that it's a buy on dips market, and we can see that too in today's trading session. Still 200 points cut on Nifty. And again, you know, some of the gainers, if you talk about, we have some of the names from FMCG space that is supporting the market, including Nestle and HUL. But let's see how this action, you know, pans out going forward. So with that, it's time for me and my team to wrap up this edition for you. But stay tuned for all the latest market updates, and don't forget to follow us on our social media platforms like Facebook, Twitter, LinkedIn and Instagram. So stay tuned, and many thanks for watching.
Now, the shares of Jet Airways hit the 5% upper circuit today, extending their 7-day gains to 37%. The airline announced it had received the air operations certificate from DGCA on Friday. Now, this may not mean the airline can take to the skies again, as the renewal of the permit is only till September. Jet also needs to cross several other hurdles which have been in place since it ceased operations in 2019 April. For more on this, let's go across to BTTV special correspondent Karishma Sudani. Karishma?
Well, right, Abha, it is the Jalan Kalrak consortium which has been able to renew its air operator's certificate. But let me try and break this down for you. This is the second time that the renewal has come in, and the first time it was given in May 2022 and also relapsed early this year, which means that they will have to restructure and strategize in a way that this time they're able to use the air operator's certificate to actually push off their services. Second big challenge for them going forward is how will the resolution plan take place in terms of the aircrafts that are left with them, and how are they looking to pay off the lenders and keep the committee of creditors also balanced on this move.
If you like the video, do like, comment, share and subscribe.
Hello and welcome to Tech Today from the heart of Seoul at Galaxy Unpacked, one of the biggest tech events of the year. And of course, Tech Today is here to bring you all the details. What kind of devices will be launched? How will Samsung build on that competing ecosystem? We are literally at Galaxy Unpacked. And let me tell you, Tech Today, of course, has been using those devices for a while, and we had exclusive access. And this is what we think about what's going to be launched right here.
And welcome to Seoul, Korea.
Annyeonghaseyo from Seoul, Korea. Hello and welcome to Tech Today. I'm your host Ayush Alavadi, and we're coming to you from Seoul at Samsung Galaxy Unpacked. And it's time to unpack. Of course, it's that time of the year again when Samsung reveals their ecosystem with two flagship devices which are in my hand right now, the Flip 5 and the Fold 5. Now, usually the headline grabber happens to be the Fold 5, and this one sort of, well, comes in and hides in between all the details. But let's give it its due importance this time, because there's monumental changes with this device. Incremental here because the Fold was already a